Welcome back to the Caspa Silver YouTube channel. In today's video, we're going to be talking about the differences between Caspa and Bitcoin Cash. So let's go ahead and take a look at the Bitcoin Cash chart. So you could see that ever since the launch of Bitcoin Cash, it had one all-time high back in 2017. And then ever since then, it's never been able to break its all-time high. And it's always just been declining against Bitcoin as an investment perspective. And then if we go into why Bitcoin Cash was created, if you don't already know, Bitcoin Cash is a hard fork of Bitcoin. So Bitcoin Cash is a peer-to-peer electronic cash system that aims to become sound global money with fast payments, microfees, privacy, and larger block size. As a permissionless, decentralized cryptocurrency, Bitcoin Cash requires no trusted third parties. So it's essentially the same thing as Bitcoin. But basically what happened here is that back in 2017, Bitcoin Cash is a hard fork that happened because people were not able to agree on scalability issues with Bitcoin. So since Bitcoiners did not really want to address these issues or fix them, and instead just keep Bitcoin as it is pretty much, they decided to hard fork Bitcoin and make Bitcoin Cash, but they did not start it at the Genesis block. It actually started, it's a continuation of Bitcoin itself. So that caused Bitcoin Cash to actually be airdropped to Bitcoiners, which then allowed them to basically dump the price after the bull run of 2017. And ultimately now Bitcoin Cash is used to mine it, and then they usually just sell it into BTC because it's the real thing. And basically Bitcoin Cash is now becoming redundant because there's a ton of Bitcoin hard forks, and they're all just failed hard forks of Bitcoin of trying to make that global scalable payment system. And now Bitcoin isn't really scalable. It's scaling through layer twos, which I think is not the right way to scale. And that's why I think Kaspa is better in that aspect. But Bitcoin Cash, what they did was still keep a lot of the same things of Bitcoin, but just simply increase its block size so that it could increase its transactions per second and increase its confirmation times. But again, these are nowhere near significant when it comes to Kaspa's statistics in these areas. So how does Bitcoin Cash differ from Bitcoin? So it was considered by some supporters to be a legitimate continuation of Satoshi Nakamoto's vision, which I believe Kaspa is actually the true continuation of that. But all Bitcoin holders at the time of the fork automatically became owners of Bitcoin Cash. And you could see that's how they got basically an airdrop. So from a technical perspective, Bitcoin Cash is similar to Bitcoin Algorithm, namely both projects have a hard cap of 21 million coins and also use proof of work consensus framework and nodes to verify transactions. Unlike BTC, BCH aims to scale to meet the demands of global payment system. At the time of the split, BCH block size was increased from 1 megabytes to 8 megabytes. An increased block size means Bitcoin Cash can now handle significantly more transactions per second while keeping fees extremely low, solving the issues of payment delays and high fees experienced by some users on the BTC network. So let's get into the comparison between Bitcoin Cash and Kaspa. So Bitcoin Cash has the 21 million supply and Kaspa has a 28 billion supply. The reason why Kaspa's supply is so much bigger is because Kaspa is the true electronic cash system that it's trying to be, and it needs a higher supply to support global adoption because Kaspa is way faster than Bitcoin Cash can ever be. Bitcoin Cash still suffers from one block every 10 minutes. Now, it could be faster if transactions are low and there's not high traffic on the network, which of course right now that's the case. But of course, if Bitcoin Cash has high traffic come in, it's going to have to hard fork and try to fix itself to actually meet the demand. Kaspa, on the other hand, has one block per second. Not only that, Kaspa is aiming to increase to 10 blocks per second pretty soon, and the goal is to reach 100 blocks per second at some point in the future. Bitcoin Cash offers 100 transactions per second. Kaspa will allow thousands of transactions per second, especially as blocks per second increase. Confirmation times is similar to BTC with Bitcoin Cash. Again, 10 minutes, unless the transactions are not that high. The traffic is low. It could be faster, but nowhere near Kaspa, which is only 10 seconds. Kaspa will also allow transactions to be confirmed basically instantly once Dagnite protocol is implemented. Bitcoin Cash orphans blocks just like Bitcoin. If you don't know what this means, usually when two miners mine a block at the same time, a orphan block is created and it becomes a ghost kind of chain, another chain from the main chain, and eventually this chain gets completely evaporated from the main chain and becomes blocks that are orphaned. So that means that miners basically are mining two blocks that will eventually just invalidate themselves, and that's wasting energy. Kaspa does not do this at all, so that's why it's more energy efficient than all the majority of proof of works out there, because most of them all orphan blocks. Another thing to go into is the mining algorithm. Bitcoin Cash has a SHA-256 mining algorithm. So this algorithm allows Bitcoiners to actually mine both Bitcoin Cash and Bitcoin, because these are the same exact algorithms. This also will allow them to easily be able to swap into Bitcoin Cash and maybe even conduct a 51% attack, which we're going to get into shortly here. As you can see here on the mining pool stats, you can see Kaspa, of course, is below Bitcoin Cash in terms of market cap, but of course, Kaspa is very new and it's still trying to prove itself in the space, but clearly we could see that Kaspa is about to hit $1 billion in market cap because of its recent growth and adoption. But if we're looking by emissions, Kaspa is number 3 when it comes to emissions when mining rewards, and Bitcoin Cash is all the way at number 7. So ultimately, we could see here that Bitcoin Cash is just a failed fork of Bitcoin itself. Nobody really cares about Bitcoin Cash. Most people would mine it and just buy Bitcoin itself because it is number 1 and it's staying true to being that trusted proof of work chain that you rather be on. So therefore, Bitcoin Cash now becomes redundant, just like Litecoin and all these other types of proof of works that are on this list, because Kaspa is basically solving all of these issues that these other proof of works were trying to solve using old tech. And also, we can see here that BCH is redundant, and once again, the founder of Kaspa gives Kaspa so much more credibility and value. If we go over here to this tweet, we could see that Vitalik himself was saying that Bitcoin Cash should just hard fork to cut block times down to 15 seconds. Using what? Ghost, the Ghost protocol. And if you don't already know, the Ghost protocol is the same protocol that Ethereum modified it, used a type of the implementation of Ghost into the Ethereum so that it can have its block times be really fast. But the Ghost protocol was made by none other than the founder of Kaspa, which is Jonathan Sampolinsky. This was back in 2013 though. The Ghost protocol is an old, outdated protocol, and it's one of the many protocols that he made and many other cryptocurrencies use or cite as they were trying to scale their projects. But today, Kaspa is using the Phantom Ghost DAG protocol, and it's an evolution of 10 plus years of work. So honestly, I rather trust the network and the tech behind Kaspa than all these other old projects, because they're all using these old protocols that Jonathan himself made. So also looking at the fact that Bitcoin Cash suffers from 51% attacks, and many of them. So going over here to Bard, it kind of summarizes the few times that Bitcoin Cash suffered a 51% attack, and you can see there was one in 2019, another one in 2019, and then it looks like the most recent one was done in 2020. All these were successful, and it's pretty much just due to the fact that no one really wants to secure the network of Bitcoin Cash, so it's very vulnerable to these 51% attacks. And again, it's just losing value against Bitcoin every single year and cycle. It just becomes more and more less valuable than Bitcoin, and it's not becoming that global payment system like it wanted to be. So all of these hard forks of Bitcoin, which a lot of them stem off from Bitcoin Cash as well, because Bitcoin Cash creates Bitcoin SV and Bitcoin ABC and just all these hard forks. they're just all redundant, and it makes no sense to hold on to these coins. Bitcoin is number one. It's always going to be better than these coins. But when we're looking at Caspa, Kaspa is definitely inspiring to finish Satoshi's vision the correct way and become a type of payment system. So Bitcoin Cash is really just does not compare to the tech of Kaspa, and now Kaspa is making this redundant and unnecessary to basically be in the space, in my opinion. So this is why I would never really want to invest into something like Bitcoin Cash, since Kaspa is now here. So I hope you guys enjoyed this little comparison of the two and understand a little bit better on why Kaspa is just superior to a lot of these other proof of work coins. If you guys did enjoy that video, please leave a like and subscribe to the channel. If you haven't gotten your Tangent wallet or your OneKey wallet, consider getting those so that you can hold your Kaspa offline and off of exchanges. If you check the links down below, I have codes to get discount on any of those that you choose. The code is Kaspa Silver. And also, if you want to support my channel, go ahead and consider joining the Patreon, where you can get access to free Kaspa giveaways every single week, early access to all my videos, and also you get to talk with like-minded people like myself. So as always, don't be average, be different.